Hi everyone, this is Mrs. V Chen. Welcome to my Form 5 Accounting Lesson 3, and today is 12 February 2020. Okay, and I'm going to show you the financial statement for partnership, and the related question is in 1987. So let me show you the question first. Alright, so here is the question in 1987. And the thing you have to do is to prepare this. Yeah, prepare trading and profit and loss appropriation account. Remember, partnership has the extra part, which is appropriation account. But this is the old name. The updated name should be income statement. So later on, I'm going to use income statement instead. All right, and also the balance sheets. This is the old question. So the updated name for balance sheet in Hong Kong is statement of financial position. Are you okay? So let me show you this. So therefore, this is the thing that we need to prepare later. Part A, Yam and Pak, two partners, and the income statement. And then another thing we have to do is Yam and Pak, statement of financial position. Replacing the old name, the old name is balance sheets. Okay? All right. So look at the trial balance given to you in this question. All right. So you have capital accounts here, and then you also have current accounts. Remember in the previous lesson, whenever we have current accounts as well, that means this is system 2, right? So if it is system 2, that means the capital account must be fixed. So if the capital account should be fixed, now I can just put this capital Yam 15,000 and capital Pak 21,000 to my statement of financial position. All right. So here is the statement of financial position, and now I have this financed by capital Yam and Pak. So since we have current account here, the capital must be fixed. Now I can simply copy the question. The question saying capital for Yam is 15,000. Okay, this column 15,000, and for Pak it is 21,000, right? Okay, so therefore whenever I have transactions later on, I don't need to bother the capital account. All right, so that will be total, so 36,000. Am I right? Okay, and also I don't need, where's my correction pen? I don't need the line here. Okay, I don't need the line here. All right. Okay. All right. So after that, and then you look at the current account. So this is the current account. So therefore, since we are going to have lots of transactions affecting the current account, therefore we need workings for current account. So therefore, here is the working. This is the current account. To begin with, this is the opening balance. I just copied this opening balance, the opening balance here, from the current account here. 8240 for Yam and 6,154 Pak. So here it is, right? Okay, so therefore I have done capital accounts, I have done current account. Now we come to drawings. Remember where to close drawings. Since this is system 2, we don't bother the capital account, so drawing should be close to the current account. So therefore 4,000 and 1,000, and so 4,000 for Yam and 1,000 for Pak, and this is drawings. Okay, all right, so this is system 2 using here in the question in 1987. All right, okay, and next, something very special in this question, which is related to point number 2. Okay, so if you have the question with you, you can give me highlight, you highlight this very, very special question. And this is about include in salaries was a salary to yen of 1,000 for the year. All right. So when you go back to look at the salary here in the trial balance, okay, so you need to do some analysis. All right, so saying what? Saying 1,000 salary for yen. Okay, so how much left? Yeah, so that would be 10,300 left. For whom? For staff and all the employees, right? So remember, who is yen? Yen is the partner, one of the partners, so that we should put this in the profits and loss appropriation account, and the normal salary to employees should go to profit and loss account. So this is the very first treatment related to point number 2, and this is the special point in this question as well. So therefore, okay, go to my income statement, expenses here, salary. All right, so since this is the profit and loss account, we only put salary to staff, ordinary employees here in the profit and loss account. So we shouldn't put the total 11,300. So it should be 11,300 minus, okay, 1,000. Okay, so that would be 10,300 here. And why we need to deduct 1,000? Because this is 1,000 not paying to ordinary employees, but paying to the partner. So here in the profit and loss appropriation account here. So after net profit, I have this less salary to yen, and it should be 1,000. Are you okay? All right. All right, and also there's another point which is very, very important. And if you remember the double entry for this salary to partner, okay, and it should be, remember, what do we debit and what do we credit? We should debit profit and loss appropriation accounts, right? And credit current account for this 1,000 and 1,000. This is a double entry you learned in previous lesson, is that right? So therefore, I follow this debit profit and loss appropriation account. So here, debit profit and loss appropriation account, the vertical form, same as deduct this from net profit, so I have 1,000, and credit current. So in the normal situation, I have to credit current 1,000 here. But however, since the 1,000 here is already in the trial balance, that means credit current, the double entry, 1,000, has been done and being included in whose account? Yeah. So this 8,240. So let me get a red pen. So this actually includes 1,000 salary to yen. As we have 1,000 already existed in the trial balance. All right, so therefore this one already include salary paid to yen, so I don't need to credit 1,000 again. This is a very, very special case in this question. Are you okay? All right, okay. And then after that, I just go through step by step for this adjustment. So number 1, closing stock. Of course, this is the old name now. Let us change the name to inventory. So where do we put closing inventory? So inventory, closing inventory. Here in the trading account, I already have the place for inventory. So that is 21,400. Okay, and closing inventory means not yet sold to the customer. So it would be current assets as well. Okay, let me find the page for current assets. Here, current assets. Always the closing inventory. How much is that? So 21,400. All right, very good. So therefore, in the additional information, I have already done number 1 and number 2. All right, and now we have point 3. Point 3 saying 5% interest on capital. Do you still remember the double entry for this? Who's going to pay? Who's going to receive? So this is to compensate the partner. Okay, the more capital introduced, the partner earns more. So therefore, the firm has to pay. Okay, all right, and then I go back to this interest on capital, right? And which is what? Which is 5% on capital. And how much is capital? 15,000. And then another 5% times 21,000. Okay, now I need calculator for that, and that will be, oh, I have a very big calculator. Okay, so that will be 15,000 times 0.5. Okay, so I have, all right, so I have 750, and do the same thing for pack. 21,000 times 0.5, and that is 1,050. Right. Okay, so the double entry, don't forget, we always enter 2 times. All right, and in the current account, so we have interest on drawings here. Interest, sorry, it's not interest on drawings. It should be interest on capital. I'm doing. So just now we have 700 for yen and 1,050 for pack. All right, so this is point number 3. So 5% interest on capital, done. Okay, and then the next thing is a little bit complicated. I'm not sure whether you can manage that or not, so, but I will show you step by step about this point 5. Okay, so point 5 saying that a machine had a net book value 200 was scrapped. Okay, so we need to do some revision about that. Machine is a kind of what? Non-current assets. Now scrapped, that means we are not going to use the machine. And now let me put step by step for point number 5. Okay, and do revision on double entry for disposal. Okay, I put disposal here. All right, so remember the double entry for disposal. The first thing, we need to get rid of scene. Okay, let me move so that you can see clearly the question as well. So to get rid of machine, so that I credit machine. Oh, how much is the cost? 800, right? Okay, and then the second thing I need to delete is accumulated depreciation. However, in this question, you're not given accumulated depreciation, however, it is net book value. Okay, so if net book value is 200 and then you have 800, so therefore how much will be accumulated? 600 will be accumulated depreciation. All right. Okay, and scrapped, that means, are we going to have money, any money we received related to disposal? I don't think so. So therefore, okay, gain or loss is very easy. If you look at the 600 on debit side, okay, and 800 on credit side, we always insert on smaller side, that will be 200. So obviously, since we receive nothing, so it must be debit profit and loss account. It must be a kind of loss on disposal. All right, actually double entry is very useful. We can use double entry to solve many problems. Okay, all right, and what is the error here in point number 5? It says no entry was made in the accounting books, so that the whole double entry being missing, okay, in the trial balance. So therefore I need to consider this when I do my final accounts. So I go back to current, non-current assets, plant and machinery. Since no double entry has been done, I need to go back to the original figure like this here. Okay, make sure you can all see. So plant and machinery, the original figure here is 78,000, All right, since some double entries being excluded, which is disposal, therefore I need to credit machinery. I need to minus 800 for disposal. Okay, and next, okay, how much is the original for accumulated depreciation? Now I updated the name accumulated depreciation to replace provision for depreciation. This is the old name, but actually they means the same. So the original is 30,000, so I start with 30,000, and then I need to do this disposal 600, so minus 600 here. Okay, now since each year we have to provide depreciation, and this is also only the beginning balance and the adjustment for disposal, so later on I need to add something here, which is the depreciation provided for the year, and then I will show you later. All right, so look at this. So I have post accumulated depreciation, I have post machinery, and now we come to loss on disposal. Okay, so where's my income statement? So here is my income statement, so therefore I have loss on disposal, and which is 200. Okay, very good. So therefore I have finished all the related adjustments related to point number 5. Okay, all right, so I'm thinking about whether I should show you the adjustment for depreciation as well. Okay, let me show you plant and machinery as well for the depreciation, and which is how many percent? Which is 20% on reducing balance basis. All right, okay, so now the treatment for depreciation. So in the profit and loss account, depreciation, and this is related to, so wrong spelling, plants and machinery. Okay, what is it? Using reducing balance method at the rates of 20%. So the steps and workings will be 20% times. So what is reducing balance method? That would be the net book value. Okay, so and then now since I already have the information about net book value, so I can do this 78,000 minus 800 minus, okay, so that would be 30,000 minus 600. Okay, so a bracket, so let me see, a bracket close from here to here. All right, so this is the whole thing is net book value, because we use reducing balance method to calculate depreciation on plant and machinery. All right, so I need to use calculator. Also, can you use calculator to work out the sum for me here? It doesn't matter since, too troublesome. Okay, let's say this is the figure for depreciation. All right, so after you get this figure and here will be exactly the same. Okay, very good. So I have finished all the related adjustments for plant and machinery, disposal of plant and machinery, and depreciation of plant and machinery. Okay, all right, so what's next? Okay, here, so I have done point 5 as well. Now come to point number 6, and also this is not a new thing, you learned this in form 4 already, so and then it doesn't matter, let me show you step by step for this one as well. Okay, all right, so the adjustment for point number 4 here. All right, okay, so the question is about in examining the debtors account. Debtors is the old name. Okay, so the updated name should be trade receivable. Okay, I just use short form, trade receivable. Okay, so how much is it in the, let me see, how much is trade receivable? Debtors here, debtors is the old name, trade receivable. So I have 13,500, 13,500 to begin with. Okay, so and the question, is this. Okay, I put it side by side so to let you see clearly. So in examining the debtors account, the new name is trade receivables. It was found that a debt amounting to 100 had proved bad and should be written off. So therefore, we have 100,000. We need to deduct this 100,000 from debtors. Okay, remember the double entry for bad debt written off, and which is debit bad debts. Okay, which is a very bad things to the business. And there's no hope to receive money from this customer, so that we need to credit trade receivables for 100,000 and 100,000. So therefore, you need to deduct 100 from debtors or from trade receivable here. So since this is a very bad thing, and this will go to income statement. Now let me get my income statements. Okay, so this is my income statement. Expenses, so I have bad debt written off, which is 100. Okay, and deducts 100 as well from trade receivable, and trade receivable is current assets here. So the original figure is, okay, so how much is it? Original 13,500, deduct minus 100 because of bad debt written off. Okay, all right, so not yet finished. Let's go back to the question. Okay, another debt of 400 was likely to be uncollectible, and full provision should be made for this. And the remaining balance, a provision for bad debts at the rate of 2% should be provided. Okay, let's do it step by step. So after deducting this, okay, doesn't matter. After deducting this, okay, no space. Okay, come back here. Trade receivable originally is 13,500, right? And then we need to minus 100 from bad debt written off, from that as bad debt written off. And the question says, okay, 400 here, 400 was likely to be uncollectible. So 400 here, unlikely to be collectible. So this is about allowance for doubtful debts. Full provision means 100%. Okay, provide for provision for doubtful debts. So that would be 400. Okay, and here, remaining balance, we give a provision of 2%. Okay, so what is remaining balance? So the remaining balance, if you look at the picture here, will be 13,500 minus bad debt written off and minus 400. Now this is remaining balance, huh? Okay, how many percent? Times 2%. Okay, so that will be, how much is it? Let me use calculator to work out that. So that will be, okay, you can see 13,000 minus 100 minus 400 times 0.2. Okay, so 260. All right, so therefore altogether, so how much should be allowance for doubtful debts? It would be 660. Okay, and therefore, and need to check, I don't have any provision for allowance for doubtful debts, so just create this. Okay, let's do some revision on this. The double entry for this will be, okay, so allowance for doubtful debts according to prudence concept, even though it is not actually happened, this is the bad news. So debit profit and loss account, and credits allowance for doubtful debts by 660. Okay, so debit profit and loss, where's my income statement? My income statement is here. So 664 allowance for doubtful debts. Okay, so this is debit profit and loss, and credits oh, where's my income statement? Oh, no, sorry. Where's my current assets here? So credit allowance for doubtful debts, that will be 660, and this is 100, so that would be 13,400. Okay, so 14 calculator, so 13,400 minus 660, so 12,740 would be the figure for net trade receivables. Okay, almost finished, huh? And then, oh, very good. And then now after point 6.7, goods costing 300 were taken by Pack. Who is Pack? Pack is the owner. Oh, error of omission. No entry had been made. And now the double entry for point number 5. So shall I just put here? Okay, so that bit drawings. And, oh, what is it? Goods taken over. Which account you credit? Credit purchases for 300 and 300, okay? And later on, don't forget, drawings account should be close to current account. So where's my current account? My current account is here. So this is the original drawings. Now I need another drawings, which is purchases, because this is the inventory taken over. How much? 300 by whom? By Pack. So 300. So that big drawings and close drawings to current account and credit purchases. Where's my purchases? Okay, my purchases here. So you can go back to the original figure in the trial balance and now minus 300. Okay, and then you can get the adjustment. Okay, let me show you. So what is the purchases? Original purchases. Oh, this is the figure for purchases. So 123,400 minus, this is drawings. All right. Okay, so therefore I think we have finished all the adjustment here. Okay, so and let me close the current account. Do I miss something? No, I think I have all things. So interest on capital, drawings, and no salary to partners because already done, included in this figure. So, okay, income statement. All right, so income statement. So I already have the key answers. All right, here. So net profit is 35,590 and shared by Yam and Pack according to the ratio of 3:2. Okay, so that will be, let me see how much. So 35,590 divided by 5 times 3. So 21,354. And then I can do minus here 35590. Okay, so 14,236 to get share of profits in the vertical form. Okay, and this share of profit is a good thing to the partner, so therefore I credit here. So share of profit, because good news to the partner. And then just now I get this for Yam, and then I get this for Pack. All right, okay, almost done. So therefore I can close. So since I don't want to waste time on doing that to calculate, I can just refer to the answer. Okay, so to get the answer quickly. Okay, so where is it? Capital accounts and current accounts here. All right, so that would be balance carry down. So 26,344 and 20,000 136. So when you close, you just use the normal way to close it to get the balance here. And finally, the balance here will be the final answer in the statement of financial position here. Okay, so that will be 26,344 and 20,136. Okay, and this is it. All right, and for the remaining things in this question, you can just post the remaining items to the relevant places and see whether you can get the key answers. The key answers here for gross profits, for net profits, and share of profit, and finally you make it balance in the statement of financial position for this one and for this one. Very good. Practice makes perfect. So thanks for watching my video. Okay, I will see you next time. Bye bye.